Hello class, I'm going to record some video to help you through the assignments. There's a lot of assignments, so the video will be a little bit long, but I'm going to walk you through the different assignments that you have to help you get through the homework. Also, you'll need to go through and review the PowerPoints for this chapter. They're also provided in the announcements. So let's go ahead and look at exercise 2-1. As you can see here, I have it recorded, screenshot of it for exercise 2-1. And so what we have is a company, a accounting firm under the name Beverly Crusher, which is a character from Star Trek if you follow that stuff. And anyhow, this firm, Beverly Crusher, has the following transactions, and we want to do a journal entry for each of these transactions. So we'll just kind of walk through. So the first transaction is April 2nd. So April 2nd, the owner of the company invested $32,000 cash and also invested equipment into the business. And so what we want to do is show the asset cash and the asset equipment as increased, and you increase assets with a debit. And on the other side of the journal entry, you have a credit, and it's going to be the owner's capital, because there's no stock because it's an accounting firm. If it was stock, you would say common stock, but it wasn't stock. Instead, it was the owner's capital. So the debits are on the left, the credits on the right, and the debits equal the credits, and so our journal entry will work out for us. The next, or the same day, they hired an administrative assistant. Now, the thing about hiring an administrative assistant is that there's no journal entry, because you only pay the administrative assistant after they started working. So there's no entry. So when you go into Wiley Plus, you want to put debit no entry, credit no entry, debit 0, credit 0, and that way the system works out for you. When you get to April 3rd, we purchase supplies of $700. And so supplies are an asset to us, not an expense, but an asset, because we have supplies available. So we're going to debit the asset to increase it, and then credit the payable, because we haven't paid for the supplies. We only ordered them from the company and we received them, but we haven't paid the invoice yet. So that payable is going to be the credit. All right, now we have the April 7th. We paid the office rent of $600. So that's an expense because it's for that current period. So we have $600 as our debit, and we have $600 as our credit because we use cash to pay it. So this increases the expense and decreases the cash. You increase expenses with a debit and you decrease assets with a credit. Then we get to April 11th, and on April 11th we completed a job, and so that means that we earned revenue. When you only have revenue when you did the work, you don't have revenue until you do the work. So we completed the assignment, we get $1,100, and in exchange for that we get we completed the revenue, that's $1,100, that's a credit, but we haven't been paid, and that's why we have the receivable. So remember, receivables are assets, and anytime you want to increase the asset, you do a debit. We get to April 12th. So April 12th, we received money, but we didn't do the work yet. So the money goes up, the asset goes up, but we actually owe. So the unearned revenue actually means not revenue. When you have unearned revenue, it means that you haven't earned it, and so you have something that you owe. It'd be like if someone paid you to paint their house, but you haven't painted their house. You owe them that work, and so that's why we're going to call this a liability, and we're going to put a credit because credits increase liabilities. When we get to the 17th, we receive money and we completed the work. So now instead of doing unearned revenue, we're going to do revenue. So this is not a liability. This is actually going to be on the income statement. So the service revenue is going to be a credit. The cash is going to be a debit because we still have an increase in the cash. We get to the 21st. We pay for an expense. Remember, we said expenses or debits, and so since we paid cash for it, that's going to reduce the cash. We get to the 30th, and now we owe the administrative assistant. So we pay the administrative assistant for work they've done. That's an expense. Expenses are always increased with a debit, and the cash is reduced because we paid it out. So the asset goes down with the credit. Always increase your cash with a debit or any asset with a debit, and decrease your cash or any asset with a credit. All right, so then we get to the supplies, and we used up some supplies. So when you use up supplies, that's the definition of an expense, using up a resource. So since we used up $120 in supplies, we now have supplies expense, and those supplies that we have as a resource that are sitting there in the supply cabinet or warehouse or wherever you keep them, those are going to be decreased, so that asset goes down. And then the final thing we'd have is she bought a computer. She provides the computer to the company, so now it becomes the company's computer, and in exchange for that, her owner's equity goes up. In this video, let's go ahead and continue on to exercise 2-4. So looking at 2-4, here's what the problem is. We have this trial balance, but the trial balance is just full of errors. You can tell because the debits don't equal the credits, and a trial balance always has to have debits equal credits. And so they give us 8 things that are wrong. Well, the first thing that's wrong is that this amount, the cash, needs to go over here, the debit amount. But they also tell us the cash from the customers was debited $570. So the cash received from customers was debited $570, and the receivable was credited for the same amount, but they actually collected $750. So they put $570, but the actual amount was $750. So we need to add another $180, because that's the difference between $750 and $570. We need to add that to the cash and to the receivable, or take away that additional $180 from the receivable, because we received the money from the receivable, right, from the customer. So that means we need to take the cash, we need to the $2,870 we moved over, we need to add another $180, and we need to take our receivables and take out another $180. When we get to the second problem, second error, the purchase of a computer for $500 was recorded as a debit to supplies. Well, this is equipment, so we need to take it out of the supplies, so subtract 500, and we need to put it into the equipment, so we need to add 500 to the equipment. When we get to number 3, services were performed, but for $890. The receivable was debited for $890, but the revenue was only credited for $89. That means we needed to credit it for another $801. So we need to take the service revenue and add another $801. So we take the $2,000 down here, the $2,380, and we need to add another $801 in revenue, because we only did 89. We need to do 890. When we get to number 4, a payment of $65 was for telephone charges was recorded as a debit to office expense for $65, and a debit to cash. We don't want to debit the expense and debit cash. We want to debit the expense and credit cash. So we need to adjust cash again. So we're going to take the $2,870, moved it over already to debits. We're going to add the $180 from the earlier situation, and now we want to take another $65 out. But here's where you usually miss this. You need to take the $65 out twice, because you added cash when you needed to deduct it. That means you put cash in. If you take $65 out, you're just back to ground zero. You're just back to square one. You need to take the $65 error out and then take it out again to make it where it needs to be. So you need to take the $65 out twice from cash. So take the $2,870, add the $180 from the earlier situation, and then subtract $65 twice. For 5. 5 is we had unearned service revenue, but we actually earned some of it. So what that means is that we need to turn some of that unearned service revenue into actual revenue. So we earned $325. So take the unearned service revenue, subtract out $325, and then add the $325 to revenue, because now we've done the work. We can call it revenue. So we're going to increase our revenue, we're going to decrease our service revenue. Salaries. So under number 6, we debited salaries and wages for $670. Or I'm sorry, we forgot to debit the salaries and wages for $670. So we need to go back to salaries and wages and debit it and increase it by another $670. And then finally we get, well, not finally, but almost finally, we get to number 7. We have accounts payable, but the mistake was that, and this one is really tricky, so you gotta be really careful. A payment of $206 was credited to cash and $206 was credited to accounts payable. Wait, so a payment on account of $206 was credited to cash, but for accounts payable, they didn't do $206, they credited $260. So they made 2 errors. First of all, they're supposed to debit accounts payable, right? So they're supposed to debit accounts payable. That was right, which would reduce accounts payable. They were supposed to reduce accounts payable by $206, but they reduced it by $260. That's where it really gets tricky. Those 2 numbers, the 206 and 260. So let's take out the original error, the 206, and then we need to go ahead and get it to where it needs to be by taking out the 260. So take the 2666, reduce it by the error of 206, and then reduce it to get it to the rightful place of 260 by 260. That'll get you down to $2,200. All right, last one on this problem. A dividend of $575 was put in salaries. Dividends don't go in salaries, so we need to take it out of salary. So go to salaries and take it out. By taking out the salaries, that means the $575 that was put in there, we need to take that out, right? And then we need to put it into dividends. So our dividends are going to go up. There was no dividends here, so we're now going to have dividends that go from 0 to $575. So if we do all that, if we look back at our trial balance, all of these adjustments are going to give us a trial balance that equals debits will equal credits. So that's what we'll do for this. We'll do these 2 for this particular video. We'll do some more in a different video.